the INR is stable, but a lot of mechanics within the INR are not. And Alex, I believe you are talking about what's happening on the derivative side in a meaningful way on the equity end in the session today.
Absolutely. In fact, that is the focus today because of what was announced by the National Stock Exchange yesterday. In fact, I would invite Samina to join us because this is a conversation that we're going to have with her as well on the editor's cut. Let's break this down first to talk about what was announced today and what the implications are, because there are a couple of scenarios that we will have to peer into, and we'll also talk about who benefits or who stands to benefit the most. Agam, let's start with what was announced, and then we'll move from there.
Sure. So what's announced is that the lot sizes for 3 of the derivatives on the NSE have been reduced. So the Nifty 50 contract will reduce from 50 to 25. The Fin Nifty contract will reduce from 40 to 25, and the mid cap select Nifty contract will reduce from 75 to 50.
Correct.
Where the effect will come into place on the 26th of April. That is one day after the 25th April expiry, and this will be valid for the July 2024 contracts going in. The reason why they've taken it up is, of course, this is an exercise that exchanges take every 6 months, and well, from what we understand is that SEBI has given well, a notional size for each contract to be within 5 to 10 lakh rupees. And considering the Nifty has run up so much, and it's sustaining well above the mark of 22,000, 22,500 at the moment, of course, it does seem like exchanges think that it's a good time to.
What is the notional value right now?
So at the moment, the notional value of the Nifty 50 is about 11.5 lakh rupees.
11.09. But very quickly, Agam, you said this is a biannual revision that the NSE undertakes. When was the last time that they actually significantly reduced their contract size?
So, well, the last time we saw a change was, in fact, the Nifty moving from 25 to 50.
And when was that?
This was about 5 or 6 years ago. I still need to...
So this is a big significant move, even though it's business as usual.
It certainly is. But it's for good reason, because we have seen the Nifty move up substantially as well in the last 5 or 6 years. So yeah, that's largely
the long and short of it, if you can call it that. But let's talk about implications, and I guess to a certain extent, Agam, we're going to have to, and Samina, we're going to have to build out a few scenarios. But let's talk about beneficiaries first. On the face of it, seemingly, the exchanges and the brokerages have...
Absolutely, always. The house always wins. Well, so, of course, it's going to lead to a better liquidity, and this will also lead to a lot of institutions perhaps be able to more finely manage their risks, because you just have that much more granularity since you have smaller lot sizes. And the real question is whether or not, you know, your institutions and retail participants benefit. Sure, the lot size is very attractive, but it'll also come down to several costs.
So therefore, and we'll come to that in just a bit, but on the opposing side, we've seen BSE make some big moves to their betterment, and we've seen that reflected in the stock price, which is up 500%, over 500% over the last 12 months.
Yeah, so I think the one house that may lose, at least sentimentally this morning, could be BSE. Of course, now, just to put this in perspective, NSE is in a different league altogether, right? So there's no way you can compare the two, but let's not forget, BSE is listed, NSE is not. So if you want to play the exchange game, you want to play the India equity story, your only way to do it is through the BSE. Now, just to put some numbers in perspective, NSE, like Agam said, has halved their contract size on the Nifty 50 from 50 to 25. This move also comes in to sort of keep up with what you have in terms of the Sensex contract size. The average Nifty contract after this change comes down to 5.5 lakhs, 5.5 lakhs versus 11.09 lakhs, which is what it was when it was 50 units. So 50 shares in terms of a contract, as compared to Sensex, where the unit or the lot size is 10 shares, the value of it is about 7.5 lakhs. So if you're comparing in terms of value, volume, liquidity, BSE is at 7.5. You've got now NSE, which is at 11, coming down to 5.5. So this change could be also viewed as moving or keeping competition at bay, right? We've maintained NSE is a league in itself, but nevertheless, BSE is gradually inching up. Last Jan, when they had the new CEO come in, there were a number of changes that were undertaken. One such being that Sensex weekly expiry was moved from Thursday, which is when you have the Nifty weekly expiry, to Friday. So they wanted to keep that separately, and that worked out really well for BSE.
And they've got an expiry on several days of the week.
Yeah, and they saw a massive bump up, right? So if I've got those numbers right, the average daily derivative turnover on BSE rose 34.6 trillion in FY24 versus 1.38 trillion from a year ago.
Yeah.
So while I said two different beasts, BSE is still really small, but someone could view this as a move of NSE to continue to maintain its leadership.
Yeah, I remember very quickly that for a few weeks, the NSE had decided to keep the Bank Nifty contracts expiry on Friday, but they took it back because I believe that BSE had come in and requested you can't do that because we already have the Sensex expiries there. So please, you're going to have to take a step back, which is after that, in fact, it was decided to pull it back on Wednesday.
Let's talk about the last implication, because I think to a large extent, a lot of people interpreted this as resulting in significantly higher volumes.
Yeah.
However, I think the kingpin or the deciding factor is going to be the cost of each contract.
Yes.
How do you explain that?
And I think this is going to be the most important aspect to watch out for. Currently, a contract in an options market, on an average, is about 20 rupees per lot size. If the brokerages decide that they do not want to change or reduce their contract or brokerage overall, that means instead of paying 20 rupees for a 50 size contract, now we're going to pay 20 rupees for a 25 size contract, which means that for a 50 size contract, or rather two contracts, you're going to have to pay 40 rupees. All right. This really doesn't become a huge amount of an issue when you actually sit and write your at-the-money options, because there the premiums are relatively larger. But when you start moving out of the money slowly, steadily, that's when option premiums becoming smaller and smaller. And the further out you go, the less option premiums that you will see. At one point in time, it will be very, very I would say it won't be lucrative at all if you actually go ahead and sell those
Could
options.
one interpretation of that be that we will see lesser volatility? Could that lead to lesser volatility?
Yeah. So it may or may not lead to lesser volatility. I think of it as a positive. Sure, it will certainly reduce the kind of traction that we see on tail ends, but the fact that you're not getting to write those options anymore also reduces the overall risk of the system.
Sure.
Because when you write an option, you are also taking on
unlimited risk.
Unlimited risk, theoretically.
Yeah.
And that, of course, reduces substantially.
And this goes back to what the regulators wanted. Remember, a couple of weeks ago,
Absolutely,
we were talking about all that froth across the broader market.
Yeah.
So this also could be on the lines of reducing risk, protecting retail investors.
Right.
But very quickly, how does this compare to the BSE costs? And I think this is going to be a sentimental negative on BSE, by the way, this morning. It wouldn't surprise me if the stock sees a gap down on back of NSE's move to half contract size.
So brokerages remain the same for BSE contracts as well.
Okay.
And in this case, of course, again, it's going to come down to, the fact remains that BSE option market is still not very liquid. So it's going to be, that's also something that's going to be a wait and watch.
And this kicks in 26th of April for the July contract.
Yes.
So we'll have to watch how these pan out over a period of time. And remember, the most important point is whether or not the price of a contract, the cost of a contract will change. So we'll have to probably speak to a few brokers and see what their reaction is going to be.